Good afternoon. On behalf of ISBA and DST, I welcome you all to the third day of this Acceleration of Accelerator program. And today we have with us Mr. Sandeep Kaujalgi, who's the Vice President at CIIE of IIM Ahmedabad, and he looks after Financial Inclusion Lab initiative, which is an acceleration program under Bharat Inclusion Fund. So he has a variety of exposure prior to this across different functions in product sales and finance. So more than that, the hands-on experience of running acceleration program at CIIE would bring in certain interesting perspectives to this audience today. So Sandeep, on behalf of ISBA and DST, we welcome you to this session, and over to you. And initially, you can present your experiences, and later, as you suggested, we could take some questions from the participants. So welcome you, Sandeep.
Thank you, Dr. Bala. Pleasure to be here. I apologize, my camera isn't working, but then hopefully, my presentation will make up for it. Let me just share the presentation. Yeah, is the presentation visible?
Yes, it is.
Okay, great. Hello everyone. Thank you very much for this opportunity. I thank ISBA especially for this. Very happy to share some of our experiences. And for me, especially, it's been a few years now that since I've been working with CIIE and have been running this program, which is an accelerator program focused on startups that are building solutions for the lower and middle income customer segments. For those who may not know about CIIE, we are the startup incubator that's based out of IIM Ahmedabad. Primarily, when we look at what we wish to do, the three objectives that drive us. One is about being a market maker, which means that we look at areas where the market isn't supporting startups, and we look to support ideas in those areas. We look at folks that are solving the toughest problems that the country needs solving, and our focus is especially on supporting solutions that scale. So it's sort of a preference that we have, tech enabled startups, that can really scale and create impact, create mass impact. That really is the focus. And in many ways, all our operations are aligned towards these objectives. Just to give you an idea of what we do at CIIE, we are there across what we call as the innovation continuum. So yes, we do have incubation spaces. We have the spaces currently in Jaipur and in Ahmedabad. On the right, you will see that we have funds also through which we invest in startups. But a bulk of our operations, the activities that we do are, in the second and the third column that we are seeing, which where we have listed down some of the startups that, some of the acceleration programs that we have, run recently. There's a variety of industries, focus, I'd say, focus areas, founder types and everything, and also each program in a sense has a different partner with whom we have been working. So what I'm going to do now is run through this presentation, present some of the key learnings that we have had, and then post that we can take your questions. However, through the presentation, if you have any questions, there's a Q&A section. Please do type in the questions, and once we are through this, we'll essentially go through all the questions that have been posted in the section. To start off, of course, I'll start with the idea of what is a startup, right? I know this may be repetitive in some sense, but just want to set the context. For the purpose of this presentation, we look at a startup as essentially an assumption testing engine, right? The founders, the innovators have certain assumptions about the market, right? They build a product for that, right? And then they test it. They may fail or they may succeed, based on which they keep on reiterating. Very likely that there is always there are multiple, I guess, circles of this ideate, build, test, which continues to happen. And the one difference between a startup and an established company is that these assumptions tend to be business critical, and essentially testing these assumptions is about testing the survivability of the business itself. And so what is acceleration? Continuing from that definition of a startup, right, about testing assumptions, we're saying that acceleration is in a way of increasing that pace of testing assumptions, right? And primarily we do it through capacity building of the startup, of the founders, and in some sense also, building the capacity of the ecosystem also. I guess most folks here are associated with a technology business incubator. You definitely know of the definition of acceleration as it existed, right? It's a rate of change of speed that happens. I'm just drawing that analogy from there. What happens in an acceleration is that cycle of testing assumptions and moving towards sustainability. That really is what we are looking to accelerate, right? And what could be these assumptions? Just some examples there, right? At a very earlier stage, we even want to test whether the technology works. Then, of course, we start building the product. We understand whether there is a USP, as in whether there is a value proposition, whether it is unique, and whether you can even sell that and make money out of it. And then once you have identified that there is a USP, you are also looking at whether the unit economics really work out. Can you consistently make business? And especially when it comes to startups or technology enterprises, in some sense, scale is also, a very critical factor. I guess all of you would have, dealt with VCs, and pretty much everyone wants to invest only in those enterprises that can scale up, right? And what's also important for an accelerator or a startup is to ensure that the business continues to be sustainable even at scale. And one more, I kept it at the last, although it's the most important, it's the team, right? The idea may be great, solution may be great. Often, if the team isn't the one that is suited to run this business, the venture also fails. So in some sense, an acceleration looks at a startup wholesomely and moves it faster towards sustainability. There's of course a chance that you will realize that no, this idea is not really sustainable. It's doomed to fail, but that's also okay. It's important to fail fast. Ideally, when you're doing all this, you're also doing it in a lean manner so that you're also conserving cash. And that's become all the more important in the recent months. So what does a typical acceleration program looks like? You typically start with a call for applications, then you do your evaluation and selections, then start with a training or a boot camp, kind of activity. And once you do that, then you begin to understand a bit about the startup. And then you also end up providing market access, typically as per the needs of the startup, right? There is a continued mentoring that is happening, as well as access to both customers, suppliers, potential channel partners, and the like. And Post that, once you've reached a certain stage in validating whether there is a certain business, you start off with a demo day, start off the investor interactions in some sense with a demo day, where the founder typically pitches to a set of investors, and then followed by post-program support. This is how a typical acceleration program looks like. Usually, an acceleration program is cohort-based, right? It's around a certain theme, and it's typically for early stage startups. There are acceleration program even for startups that are in the growth phase. Far it's they're quite fewer in between, but yes, they do exist, and I think we are seeing a substantial number of those also. Which, uh, so that was just to set the context about acceleration. What I will do now is go into some of the learnings that we have had running the Financial Inclusion Lab Accelerator as well as the other accelerators, and you know essentially look at how we could probably think about designing an accelerator program, whenever we want to do it for our own enterprises, our own incubators. Sorry. The first and the foremost is that we recommend that an accelerator program should have focus, right? What do we mean by it? Generally, right? I mean, we can always say, okay, this is an accelerator program. Any startup in this stage may be willing to can apply for this, right? So that's one way of doing it. But often, what we've seen is that uh, the more options we provide, the less focused it is. The quality of support that we can offer to the startups, is significantly limited. On the other hand, you will always have a lot more startups apply for the program, right? But the quality of support definitely diminishes. The quality of startups may or may not, go down because ultimately you have only a small cohort of startups that you need to select. But definitely, we can definitely say that the team that is essentially managing the accelerator will find themselves quite stretched. That has been one of the key learnings. On the other hand, let's say you want to make your acceleration program too focused, right? What you're going to see is that you'll see a lot more focused support that you can provide to the startup in terms of its domain, segments and the like. However, there'll be fewer startups that are operating, in that particular domain. Suddenly I guess the set from which you have to select startups, that usually reduces significantly. And what we have also seen is once once you restrict the number of startups, that you can take into the cohort, many of the startups seem to be doing something very similar, and as a result, even within the cohort, there is a certain sense of rivalry. That usually is there probably in every cohort, but this is increased significantly when as you start putting in a lot more filters. I've given the example of one filter, which in a sense we have applied for the Financial Inclusion Lab, which is focusing on fintech skilling kind of startups and for lower income customer segments. But then you can have similar filters, right? You may be focused on a particular geography, which is around your incubator. You may be looking at a specific technology and its applications. You may be looking more at enterprise versus consumer. There are quite a few accelerator programs that we have seen which focus only on women founders, right? It could be restricted to alumni or only to startups that are incubated in your in your incubator. So similarly, you can apply a lot of filters there. But it's important to understand that you should somewhere strike that balance, right? And because ultimately the success of the program is linked to the success of the startups, and good quality startups, that will emerge only once you have once you are able to evaluate sufficient number of startups. So when you're building this theme in some sense for your accelerator, uh, make sure you're doing certain kind of preparation beforehand, and you have a point of view after speaking to the people in that specific ecosystem. That will greatly benefit you in multiple ways. And finally, it's extremely important to understand whether there is a need for the acceleration program itself, right? If there are 10 other people offering the same, I mean, it's the same thing that we advise to startups, right? What is your differentiation? Why are you doing this instead of someone else? It's always good to understand, uh, whether there's a need for this and why you should be doing it instead of someone else. So that's some of our learnings here from this. Once you've identified, a particular theme, very likely that it will also be driven in some sense by the funder for this. Uh, you then start building your capacity, right? And capacity can be in terms of multiple things, right? Uh, the best way to look at it is, okay, think about what the startup will undergo through the program that you have designed. And once you design that flow, that customer journey where the customer is a startup, you'll begin to get an understanding of what are all the requirements that exist in this, right? And when you start doing this, you'll begin to understand the gaps, and you'll have to start building the gaps in that. One very important factor is some domain expertise. Either you should have it internally within the team, which is actually extremely desirable, right? But if you don't have it, then it's important to get it from the partners, the right set of partners, from your alumni and the like, who can actually advise the startups, on some of their critical business success factors. In terms of people, like I said, skill set, domain knowledge, and very important. And I guess it's expected in incubators, but they should have that sense of how a startup should run. Right. So that is extremely important. There are different kinds of people, roles that are involved in an accelerator, right from administrative activities to someone who's managing the program entirely, and also portfolio management, which is more like a switchboard, a sounding board for startups. In terms of processes, you need to set in place an evaluation process, startup evaluation process, maybe a multi-stage going through multiple eyes with certain parameters as relevant to the theme, right? Then have your reporting and all in place. And also very important, if there's a certain grant or some capital which is associated with your acceleration program, then have a disbursement process in place. So these are some of the things that good founders typically ask, right, of startups whenever they are applying for the program. Then you have infra, and very important are the partners for this program. So at the Financial Inclusion Lab, for example, we have fintech expertise within the team, right? Including myself, I do have some fintech experience. Plus, some very leading names in fintech are there as part of the team. What we also do is we organize some of these sprints and roundtables and other such events, which help us build our network in some sense, right? It also helps us in sourcing some of our startups for the accelerator programs. While earlier we used to have it in person, nowadays we have it mostly virtual through webinars and the like. We also have an online application portal, but I mean that's again in some sense optional, but it actually really helps when you have multiple people being associated with the program. Next part, once you have built and let's say you got started with the accelerator, the first thing that you're going to do is have that call for application and start sourcing the startups. And it's extremely important, especially for a new accelerator, to have the right set of experts evaluate, those startups. Internally, the team may not have the required expertise. In which case, at least some experts should come on as advisors during selection. Also, applicants, they would have spent a certain amount of time filling the application. At the very least, it's good to give them feedback, right? Give them honest feedback, so that they are able to improve, their solutions. And this is even to folks that are in some sense rejected, right? And then this is a very important factor. And it's where a lot of people, I guess we have seen them, making this error. There are these startups. I'd say these are the good-looking startups which are just hopping one accelerator after another. What happens because of this is that founders, because they're just continuously hopping, their engagement is actually very limited, right? And it means that you're putting in all that effort when the founder doesn't respond, right? For example, you go all ends, you make some connect with some key, not just investor, but maybe some industry leader, and the founder doesn't really respond the way you expect him to respond, right? So these certain startups who are actually not, who look at it more as a marketing event more than an acceleration event, it's important to avoid such people. The way we normally do it is we ask them what really they expect out of the accelerator program. We also mentioned there that we ask for 2% mentoring equity, right? And sometimes this has actually also helped us in understanding whether the founder is actually there to get the best out of what the accelerator can offer. And very important, whenever you're sourcing startups as well as supporting startups, make sure you are leveraging the networks extensively. Don't just look at a very limited network. Don't go all by yourselves. Spread yourselves out. Reach out to as many people as possible to source the right set of startups. And during the call for applications itself, make sure you're marketing the specific offerings that you have for each of the startup. And this is extremely important because founders especially want to know what's on offer, right? If they want to, let's say, give you some part of your time, their money and the like. So it's important to tell them about the specifics. Some don'ts when it comes to sourcing and selection is don't compromise on quality just because you have slots to fill, right? They drain your your resources significantly, and instead of focusing on the really good startups, you end up focusing on some of these, and the quality of support is damaged. Second one, although we normally, of course, nowadays have this online application process even over a pitch deck and all that, make sure you have at least 1 or 2 deep conversations with the founders before selecting. You really get that feel when you're speaking to the founders. Good founders versus bad, the team dynamics and everything do emerge when you are in conversation with the startup. Also very important, something which we've learned is every startup that there are quite a few challenges, right? Something is really not working. Don't really expect founders to share all that during the selection decisions. Typically these things emerge only after that. The best that you can do is assess that these are the these could be the challenges, but then always be open to surprises even at a later date. Finally, very important is we often come across startups that are like really good, right? Great team, but working part time, right? Wonderful idea, but it's still at an idea stage. It's not really moved to a stage where it can be accelerated, right? Great team again, but it is not what your program is mandated to do, right? For example, in financial inclusion lab, we get a lot of this education tech startups because we are looking for skilling kind of startups, but that is not exactly a match for us. So even though the startup may be great, the founders may be extremely capable, we end up saying no to those startups. Yeah, I mean, these are some of the learnings that when it comes to sourcing and selection of startups, both from the financial inclusion lab as well as the other accelerators that we have. Next, when it comes to supporting startups, right? Broadly, we have I've split the support into 4 areas, starting with training, mentoring, providing market access, and finally, raising investments or funding in general. Right. When it comes to training, we believe that except a few experienced startup founders, many of them do requires training or on essential skills. This is not even folks who are coming out of corporate and are building startups. Even they may even have like 15, 20 years of experience, but they still do need certain essential skills of running a startup. And in wherever we see a certain domain specific or theme based startup, theme based program run, it's important to give them certain market related information. And this is especially important for founders who don't come from that specific domain, and they really value it, right? Uh, Generally, what we have seen, workshop style, sessions are much preferable to just lectures. Very interactive sessions are what folks very much prefer. And another observation that we have had is wherever we have brought in founders, right, to speak with the startups, and the founders are actually sharing, both their mistakes as well as successes openly. Such sessions are usually extremely appreciated by the other founders. Right? So wherever possible, try to get as many founders talk to these startups. Secondly, in case of mentoring, in some sense, if you look at all the mentoring that we offer, there are 4 types of mentoring that a startup would need. Some would need maybe 3 of these, some may need just 2 of these, but broadly, these are the 4 areas. One is around, like the startup sense that I mentioned earlier. It's about this hustling skills. How to get things done without spending too much money, get it done faster, running a lean startup and the like. Second, very important, is about building the market understanding. Unless the founder has a significant amount of experience in a particular market, the market understanding is extremely critical. And it's also one of the reasons why many good founders also come to some of the more successful accelerator programs. Third area of advice is around the product and the technology, because even what we've seen is that many even good founders end up doing some basic mistakes, and someone who has worked in product can actually offer that expertise to them. And lastly, very important is fundraising, right? Like I mentioned in the last column there, fundraising is kind of like a key success metric for most of the startups, and in a sense, even for the program. So mentoring there is especially important, and I guess it's like a mandated thing, especially if you're dealing with first-time founders. Thirdly, when it comes to market access, what we've seen is most founders don't, startups in general don't get access to the right set of networks. So an incubator, an accelerator plays a very, very important role, when providing this access. In some sense, whenever we go for a cohort-based program, because in a cohort there are similar kind of companies, we are also able to attract certain market access partners, right? Because they're not then dealing with just one company, but they can have a resource there to look at multiple companies, and which can actually make a significant change even for them. So in some sense, for training and for market access, a cohort kind of approach helps a lot. Right? Uh, when it comes to market access, it's really something that the incubator should continue to build. It happens only over time. Uh, for example, if I look at the Financial Inclusion Lab, where we were maybe 2.5 years ago versus where we are now, I think the one area where we have improved significantly is building our network for market access. Um, yeah, I'll just move to the next one, which is around measuring success. Now, often the measurement of success is defined by the program funder, right? And generally, when we are looking at measuring success, it's important to look at the outcome metrics more than input metrics, right? For example, it's not about how many training sessions you had, but rather about what the entrepreneurs got out of it, right? Some examples of metrics I know I've just provided there. Right, it could be both impact on the industry or impact on customers. The filters that I mentioned earlier, and it could also be impact on the supported startups. So there are multiple ways in which you can measure the success of a program, and typically you need to work with the program funder to arrive at the success for this. For Financial Inclusion Lab, for example, one of the key program objectives is to build new use cases of financial inclusion, right? Of digital financial inclusion. So we are measuring the total financial inclusion use case. In some sense, that is more like an input for us. However, similarly, the number of startups that we have supported is also input. However, the number of startups that have raised, let's say, follow-on funding is an output metric, right? Number of individuals that all these startups have supported is also an output metric, right? So these are some of the ways in which you can actually measure success of a program. And this becomes especially important whenever you're running multi-year programs, because then you're able to change, pivot. You're able to, in some sense, again show to those funders that you're actually doing a great job. Lastly, just want to highlight some of the other key learnings that we have had. Firstly, like I mentioned, the multi-year programs, right? Because you're building your expertise and networks and the like, and reputation year on year, you start seeing better outcomes for the startups. There's a risk that you may not have sufficient startups to support and the like. However, in our experience, the benefits outweigh the risks. Right, so instead of just doing a one-off event, it's always good to keep events that are repeating and are on a more continuous basis. The second point also mentions a very important, learning that we have had, that acceleration should not just be just that one-time event. It's not just about doing that 3-4 month kind of engagement. Rather, you do that engagement and then continue with a light touch, support. That actually adds a lot to the value that one can get out of the accelerator. Next, of course, would be about sharing insights. This is something that many people don't do much. Even at Financial Inclusion Lab, we are constantly trying to do that. But Again, we can always improve on that, right? But what happens is whenever you share insights, ideally do it with the founders, right? Founders are on the field. They can give insights about their customers, about technology, about their product and the like. So when you start building those insights, you start being seen as a thought leader there. And it helps you a lot. A lot of startups now in the area of financial inclusion, for example, now approach us. Right? And very important, it's important to understand that ultimately we are enablers. And we may achieve success, we may be associated with great partners and the like, but ultimately the startup belongs to the founding team, and we are only helping them set things right. Right, that really is the focus, and that really is how we are looking at ourselves. Right. To end this presentation, I'll just highlight that recently we worked with a couple of other accelerators in the US, in US, Europe, and other emerging markets. And we came up with a brief paper on what effective acceleration looks like for inclusive tech startups. This is focused on certain kind of startups, but it's a good read. Do check out for this. It's on the BFA Global website, and hopefully you'll get a few more pointers from that brief. So great. That's the presentation that I wanted to make. Yeah. Thanks for that.
Thank you, Sandeep, for this quite comprehensive presentation. It covered almost all the salient aspects of running an acceleration program. Before I open it up for a question from the participants, I have one curious issue to discuss. You mentioned about financial inclusion labs. Fintech itself, to me, it's a very narrow area for acceleration, and in that financial inclusion is another um, kind of a very focused niche. So how did you manage to attract companies? That's one. And second one, I'm sure some of these companies who were accelerated were looking government and financial institutions like the banks as their customers. So if you could also narrate from the experience in the past batches, one or two case studies or successful initiatives, how did they accelerate from point A to point B? That would be interesting.
Okay, sure. So on your first question of whether there are sufficient startups in the space, right? It tends to be very focused. When we were looking at, we actually did a study before we started off with this acceleration program. It was a 2-month long study where we spoke to a lot of investors, startups, and everyone in this field. And what we realized is, firstly, that there was no such program which was offering such deep support to startups that are building for this segment. So there was a need. Then we also looked at what are the total number of startups out there, right? And we were looking at what's the market size really for these kind of startups. Generally, we believe that if there is a large market, right, then it's only a matter of time before there will be startups emerging in that space. And in our case, when we looked at the thesis itself, so we had this opening up of the financial sector that was happening, that started happening like a few years ago, and the Jan Trinity, as we call it, started coming into being, and that was opening up a lot of opportunities. The number of fintechs is itself in several thousands now, right? At least some 3,000 odd fintechs have been set up. Maybe some of them have shut down, but there's still quite a few startups out there. And we were essentially looking at the entire market, and because the overall market had a few thousand startups, we felt that even if we start focusing at inclusion, and we realized that okay, there are at least 2 to 300 startups that definitely need our support. And this was validated when we started the uh, call for applications. In fact, our first call for applications that we had for the first cohort under the lab, I think we received in excess of 300 applications from startups uh, who are into financial inclusion space. So yeah, I mean there are startups, but not so very few that we uh, we'll have a problem, or with that we'll have a problem with the number of startups. So that's the first question. Second, I agree with you. I think when it comes to the fintech space itself, tying up with incumbents is extremely important. No fintech startup can exist mostly all by itself. They have to tie up with a particular, either NBFC or a bank or an insurance company, the like, and then come out with a solution for that. Right? And even in fintech, if you look at it, there are credit startups, insurance, savings, and different kind of startups. So for many of the startups, right, especially there are those that were in the credit space, right, who were offering lending solutions, we enabled partnerships with NBFCs. Because for this segment, banks are typically wary of lending to these subprime customers in sense, but NBFCs are still more open to do it. So, sorry. So we started with, let's say, giving those introductions, making those introductions with NBFCs so that they can, tie up and start offering solutions. In some cases, wherever they already had some introductions and were doing some negotiations and the like, we also advise the startups on what they should be focusing on in those during those negotiations, right? And then technology integration also about specific asks that they should have. One example that I can give is there's a company called Frontier Markets in the recent in the recent cohort. We introduced them to a couple of solutions to offer Aadhaar based payments, right? And we essentially, in some sense, I don't say handheld, but we advised them through that process so that they could complete the agreement, complete the integration, and go live. So yeah, I mean we've been able to do that.
Thank you, Sandeep. Thanks for answering both the questions. So, Dr. Balakrishnan has a question. He has typed in the questions. So, he's asking about strategies to deal with lack of ease. I think he means lack of comfort, rivalry within cohort while running Accelerator. So, would you like to take that question?
Sure, sure. So what we've generally done is, other than some of those training sessions and the like, right? Most of the conversations that we have with the startup are independent of each other, right? So it is very important to give that comfort to the startup that what you discuss with one will not be shared with the other. And the best way to do it is, of course, is to avoid direct competition within the cohort. But if that is not happening for some whatsoever reason, then in some sense it is good to have some difference in the teams that are engaging with the startup. While there may be a common program manager or someone, whenever the startup is discussing some of its key or critical, it's providing us critical information. We may have two separate, let's say, portfolio managers that are engaging with the startups, right? So there is some kind of a barrier in between. So we have had that experience, and in one case, it so happened that were kind of like direct competition. What we did was we we actually brought both of them together in the room and tried to understand what is okay for you and what is not okay. And we came to an arrangement based on that.
Great, great. So, in fact, Carl Burt says it was an extremely insightful session, and it also gave step-by-step approach towards developing an efficient accelerator program. So that's a comment and a feedback. So,
Thank you.
kudos to you. And Abhi has another question. Would like to know, understand insights if domain affect acceleration period, whether the domain has any impact on the acceleration period, like hardware focused acceleration versus tech software based acceleration, like financial inclusion. So this domain and acceleration period is the question.
Yeah, very good question actually, because this is something that we have experienced, right? When I look at, let's say, fintech, right? Because the startup has to, deal with, an incumbent like a bank, and banks are usually slow. So let's say you start engaging with the bank, they are going to take 3 to 4 months just to come to a decision. And what happens in that case is that suddenly the timelines of the startups are affected. So yes, the period of acceleration may vary. However, what we have done to take care of that is when we are looking at selecting the startups, right? So we have identified a few things that are likely to delay the acceleration of a startup. So when we're selecting the startups, we ensure that we are actually able to accelerate them. So let's say there is a startup which is in the lending space, but it it really does not have any kind of partnership, right? Or it has not even started speaking to a particular, an NBFC or anyone like that. Or we know that NBFCs are unlikely to support such kind of a startup, then we do give that feedback upfront, and the startup may not make it to the cohort. But yes, it's important to keep this in mind and accelerate at the right time for the startup.
Right, right. That brings in good amount of clarity. The Prasad Manan is on this mentor equity. So to me also, like, it's intriguing because mentoring is a two-way process. One, the mentor's engagement with the startup, the kind of connect he establishes, and the other side, whatever the transpires during mentoring process, how this startup response and this stimulus response kind of cycles. So this is one point I would like to get some explanation. In addition to that, more specifically, Prasad Manan's request on explanation on this 2% equity. Is it for mentors or the CIIE takes it, or so those kind of explanations?
Okay, so in case of this, it's CIIE that takes the equity for this. It's not the actual mentors who are providing. It's CIIE as an organizational mentor, in some sense, that takes the equity from the startups. And we think it's important. Primarily, when we started it, it was to ensure that there's an engagement and a buy-in from the founder to actually get the best out of the program. Right? That really was the objective. Because there are a lot of programs which take even something like 7-8% and the like. We kept it to a minimum, but just wanted to ensure engagement.
So Prasad has a follow-up question. So the external experts, mentors whom we invite to support these startups are doing pro bono.
Yes, yes. In most cases, we I guess we've seen that many of the mentors that we bring on board, they're doing it pro bono. We do have internal capability also. So what specifically when it comes to the financial inclusion lab, so we have a consulting partner called as MSC. That's actually supporting us. They are a consulting organization focused on financial inclusion, digital financial inclusion. So we have mentors from there. We have internal team members who are mentors. Even within our networks, we have a few folks who actually provide this mentoring pro bono.
Okay. Yesterday, someone informed me that few accelerators charge fee for the acceleration program. Sometimes it's around 75,000, and someone else also was mentioning. I don't know how much it is true. They said it's a Hong Kong-based agency which charges something around $20,000, but with an assured outcomes post acceleration. So, would you like to comment on this fee-based model vis-a-vis the equity model?
So it really depends on how confident you are with that. 75,000, especially early stage entrepreneurs, I mean, they may be unwilling to do it. That's how we look at it. Uh, but it really depends upon the reputation of an accelerator. I mean, today, if, for example, CIIE also comes up with a program and it says we are going to charge whatever 75,000 or 1 lakh rupees for this acceleration program, we know that there are startups who will be willing to pay that amount and be part of the program. But then we also believe that we'll be underselling ourselves if we do something like that.
Right.
Right. Equity is a lot more cost. It's a lot more costlier, and it's also in some sense, if we have provided the required support to the startup, the value of that equity increases. So in some sense, you know, uh, it's a measure of how successful we have been in supporting the startup.
So there is one more follow-on question related to mentoring from Soumya Kudagi. Has there been a case when a mentor invested in the startup or took equity in the startup as a mentorship fee? How are these situations handled in an accelerator?
Right. So it's extremely important that way to draw mentors from from a pool, uh, I guess, in which you trust, right? These things do happen, but at the same time, we believe that because we as CIE Co are, it's not just that the mentors engage with the startups, we are also engaging with the startups on a regular basis. There's a certain trust that is built between the startups and with CIE Co. So any such things, it's so in the lab program itself, we have not had that kind of experience. Uh, Also because of the relationship that we have built, both with the mentors as well as with the startup that we are engaging with. So I mean, I've not had this experience so far. But mentoring, staking equity, I mean, if there's any arrangement like that, then we ask the startup to deal with it separately with the specific mentor. It's for the, like I said, it's the founder startup. Let them decide. You know, Once a mentor takes equity, they are essentially engaging with the startup for a much longer period, right? And which means that it's a decision for the founders to take.
Right. There are two more questions. One, has a CIE tapped into CSR funds of corporates to fund the cohort? I mean,
Yes.
whether CSR fund is used as a fund through which CIE takes a stake in the companies. So
We do. We
there are.
do have a seed fund, where we use the CSR money to invest in startups.
Yeah. And Abhi's question is like any views on global acceleration network GAN? Do you have some insights?
Not much, I'm afraid.
Okay. Okay.
Not really leveraged that much, but we do. We have definitely built our own network of Accelerator globally. We have done that, but not CAN specifically.
Right. So we are almost on time. So do you have any closing comment, Sandeep?
Well, firstly, we are, I mean, if anyone wants to reach out, very happy to help. We've had a lot of experiences running, we have also we had our shares of mistakes. Very happy to ensure that you are also able to learn from our mistakes. And, so if any of you have, a need to get in touch, I mean, please feel free to do that.
Yeah. So thanks a lot, Sandeep, on behalf of NSTDB and ISBA. It was a wonderful session. It was quite comprehensive, as I mentioned before, and I think the participants also were quite engaged with your message, so they actively took part in the conversation. So thanks for joining in, and we would continue to be in touch with you.
Yeah, thank you very much for having me here. Pleasure.
Yeah. Over to you, Monil, for the session break.
Yeah. Thank you, Sandeep. Thank you, Dr. Bala. We have panelists ready for the next section. We'll begin it in a few minutes from now.